Let me tell you a fun fact. Within the last 2 centuries, more than 90% of the world's millionaires have been created by investing in real estate. But if done incorrectly, without the right knowledge, required skills, or partners, it can also create a ton of problems and a lot of sleepless nights. You feel like sometimes there are way too many gurus out there trying to sell you on a weekend course, or just too much noise to cut right to the facts? Yup, we did too, and this is why we started this podcast. Our goal is to provide real estate investors, entrepreneurs, and enthusiasts with all of the most recent knowledge, secrets, tips, tricks, and tactics so that you can grow your own portfolios, increase your returns, net worth, and most importantly, create generational wealth for you and your loved ones. Remember, this is your real estate career. Information is your sword and shield, so eat hearty, prepare for battle, and grind your way to victory. My name is Tejas Gosai. I'm joined by my partner, Jeremy Moyer, and we welcome you to the Real Estate Investor MBA podcast. Ladies and gentlemen, welcome to your favorite real estate podcast. It's Real Estate Investor MBA. I got my partner, Jeremy Moyer.
How you doing?
Tejas Gosai here. Check out our website, www.rei.mba. We'd love to hear what you think. And there's some projects that we can all work together on in some other way, shape, or form. But we have a great interview today. It's rare that people talk about the current events and really hit it on the nose, but we got a good guest who really gives a good framework of what's going on geopolitically and how it's affecting real estate and money and markets. Jeremy.
Absolutely. So yeah, we had Tim Milazzo on today. He's the co-founder, CEO of StackSource, which is a tech-enabled commercial real estate financing platform. StackSource has now completed more than $250 million worth of commercial financing transactions. Actually, during the interview, and they were nearing $1 billion. So I think his bio needs to be updated a little bit. They're reinventing the mortgage brokerage model through a tech-enabled marketplace and service. Prior to StackSource, Tim worked for some tech giants. He worked for Facebook and also Google, where he helped expand business-to-business marketplaces in ad tech. And he also comes from a family with a history in real estate. He does touch base on the history in real estate with his family. He mentions briefly on his prior work experience and how him and his partner kind of founded StackSource as a company. But Tejas, what do you think? I mean, I was kind of blown away by some of the detail. Yeah.
Yeah. Also, just Ukraine and Russia and what's going on in the world absolutely affects us, our program, our listeners. And it's good to hear something other than the news talk about it in a more strategic way.
Yeah, he dives into the capital markets and all the different sub-segments, banks to CMBS to Fannie Freddie, and kind of where they are on the asset classes when he sees what's going on right now, and then also the rest of 2020 and 2023. So it's definitely an episode I think you guys are going to enjoy. Welcome back, everyone, to Real Estate MBA. We're excited for the interview today. We have Tim Milazzo with us. Tim, how you doing?
I'm doing great, Jeremy. Thanks for having me.
Absolutely.
Welcome.
Before we kind of dive into some questions today, to learn more about StackSource and commercial industry, the commercial real estate industry and financing and everything, can you take just a few minutes and give us, the listeners, an idea about who the real Tim is and how you got originally involved with real estate commercial financing?
Yeah, thanks so much for the intro, and thanks for having me on the show. So I'm Tim. I'm one of the two founders of StackSource. We're one of the fastest growing commercial mortgage platforms in the country. And I got into this in a little bit of a roundabout way. So I had a dad that was a commercial real estate broker and successfully striking deals in New York City in the commercial real estate market and leasing up office buildings. And I never thought I would follow in those footsteps. It was something that was interesting to me, that real estate developers and real estate investors were putting together the cities of tomorrow. That was really cool. But to become a broker and get in the bullpen and, pound my way through cold calls for the first few years, was not what I was envisioning for the beginning of my career. So I actually worked for tech companies for several years before getting back into commercial real estate from a tech-enabled angle. And that's what we've done with StackSource is we've taken the commercial financing process and we've simplified it so that you can submit a loan request online, instantly get matched to different financing sources that are going to be relevant for your deal, and hopefully make the financing process for real estate investing much simpler.
It's awesome, man. Great work. How long have you been working on the company?
So my co-founder Nathan and I both started doing this full time in 2016, and at that time we were putting together a prototype for what an online platform for commercial financing would look like and how it would work. We launched the platform in 2017 as a marketplace for real estate investors that wanted to seek capital on the platform to enter a loan request and get matched with this network or marketplace of lenders. And the team at the time was me and Nathan and another software engineer with this prototype, learning from how simple can we make this process? What are all the pieces that we can make go away through automation? What are the pieces where we're still going to need to work manually on these loans? And where are the pieces that both borrowers and lenders alike are going to need assistance and human expert support from the likes of those that are capital advisors and financing brokers? And as we started to figure out those lines of what pieces are going to be automated, what data will be brought in to make these loans more streamlined, we started building a company around that. So that ultimately became StackSource. Today, we have more than 30 professionals, both on the technology side as well as real estate capital advisors that are helping to put together these deals around the country. And we've done a significant amount of business. We are going to be passing $1 billion of capital arranged on our platform shortly.
Woo!
Yeah, and it's a huge milestone that we've been through a lot of ups and downs to get here, but something is finally clicking and working well and growing, and we're excited to continue work on the next chapter of simplifying the commercial financing process.
That's tremendous, Tim. So it sounds like the platform almost is doing something similar to like mortgage brokers. Would you agree with that?
Yeah, absolutely. Commercial mortgage brokers, and as a matter of fact, you get no less personal attention on StackSource than you would with a traditional commercial mortgage broker. So our professionals that are working on deals and advising borrowers on financing structures and helping getting an underwriting in a state where it's going to be attractive to the capital markets, those are called capital advisors at StackSource. And we have capital advisors in several cities around the country at this point, from LA and San Francisco to Dallas and Chicago, down in Florida and up in New York. And these capital advisors have been lenders, mortgage brokers, and real estate investment principals in their own right over the last 10, 20, in a couple cases, 30 years across the industry. They know everything there is to know about real estate finance and financing structures, but they are harnessed with the technology that's going to make them more efficient. We're faster than traditional commercial mortgage brokers, and hopefully get you to access sources of capital that you wouldn't think of that are going to be beneficial for your deal.
So is there a loan limit, like minimum, maximum, or like, are we looking single family rentals or flips or 100-unit apartment buildings? Or is it everything in between?
Yeah. Well, the only thing we wouldn't do would be 1 to 4 unit residential properties on our platform. So as we think about, someone buying a home, obviously to live in, even at that point, it's not even a real estate investment. It's just a personal residence. That's where Rocket Mortgage and the likes of some of these online mortgage lenders are really attacking that market, trying to make it a simple consumer process. When you get into real estate investing, and particularly multifamily and commercial, so multifamily being at least 5 units, then you're left out in the cold if you go to somewhere that is a mortgage company, a Rocket Mortgage, or even your local bank, mortgage loan officer. They don't know how to work with multifamily and commercial. And now you're into this land of, do I know the right people in the capital markets? Have I done this process before? And even if I have, and I'm an established sponsor, syndicator, or fund manager, what sources of capital are out there that I haven't been exposed to and I haven't met yet? How do I put together the capital stack today that's going to be most beneficial for my fill in the blank, for my development deal, for my value add deal? How do I refinance with the very bottom interest rate? What insurance company is out there lending at 3% flat today when treasuries are pushing agency loan rates higher? There are all these scenarios where finding a better rate, finding more leverage, finding a more flexible loan may be relevant for a real estate investor. And so for anything that's commercial or multifamily, that's where we step in.
So I have a commercial real estate practice. I started with phone calls, all that fun stuff that no one wants to do. But luckily, we have a decent practice, and it's been very primary to be news oriented, know what's going on with COVID. You're asked to know a lot more with what's going on now. I mean, your business has to be changing. Interest rates are creeping up. Everybody's kind of getting funny.
Yeah, it is funny that it changes quickly from one thing to the other. We thought in March of 2022 here that we'd be talking about inflation and what is the Federal Reserve going to do on the 16th of March to raise the central banking interest rates for the first time in years, right? Now with Ukraine being invaded by Russia, it's a completely different storyline. It's different economic disruption. Is oil going to hit $200 a barrel? There's always something happening in the economy. And as a matter of fact, when there's more dislocation in the economy, it can impact who you're going to from a commercial financing standpoint. Is your local bank, is their credit committee even meeting this week with what's going on geopolitically? You are planning on refinancing into a CMBS loan? Great, except CMBS just paused industry-wide for the month of, or at least for the first half of the month of March, so they can see what would happen and what would bond purchasers, both domestic and international, start to do, and what's that going to mean for yields of CMBS bonds, and that impacts, the issuance of CMBS bonds, which impacts borrowers. All of this stuff moving around means, as a real estate investor, as a borrower, and that's where the majority of your capital comes from in any case. I don't care if you're conservative and you're at 60% leverage, or you're aggressive and you're at 80% leverage. The majority of the cash in a real estate investment deal is going to come from debt. It's going to come from a commercial mortgage. To not know all of these different pockets of capital, all of the players, how are they shifting? Nobody knows that as a single borrower. So our job as a platform is to say, we are not only facilitating transactions, but here's what the data is saying from all of these balance sheet quotes, debt fund quotes, CMBS quotes, all being collected. A commercial mortgage brokerage, they may be very well connected with relationships. They may be very knowledgeable, but what are they doing with their data? Are they mining that data and putting it together in a way that says, here are the trends of commercial mortgage spreads for different types of, so that's the type of thing that we're trying to do with the platform, in addition to making the process faster and simpler, is say, all of this data, what's happening? Where is capital available? Where is it not? How can you truly capitalize your deal? Because your cost of capital is one of the main drivers in making money on a real estate investment. It's one of the main drivers on your IRR.
Yeah, I have an anecdotal response. So as a realtor, when you elect financing, there's the couple lines there that say, interest will be 3.5, not to exceed 4.25. And I always explain to my clients every time, like, we got to keep that spread thin. What if there's a war and you need to get out of the deal and the interest rates go through the roof? I never really thought we'd be having this type of a conversation, but it's cool to see how like intricately detailed this. Very impressed. Jeremy, you go.
No, Tim, that was a great explanation. Do you just kind of like circling back on the markets? Like you just said, CMBS, they're kind of taking a pause right now with loan applications or their review committee. What's the rest of the market doing? Are they? Do you think they're baking in some monetary tightening from the Fed, either with reducing their balance sheet, or they're not really sure yet and they're just kind of waiting to see what happens over the next month? Can you speak to that at all?
Absolutely. Yeah. So CMBS, at least for a couple of weeks, is going to be paused on new issuance, which doesn't mean that every CMBS loan application is necessarily going to die. What it means is that's going to be a capital source where if you're certain that's the way you want to go, you're going to have to be patient and see if it's going to come back in the next, several weeks. And that's what we'll see. In the meantime, there are several other capital sources freely flowing. For one, banks and credit unions have a good amount of dry powder. Banks and credit unions are typically not non-recourse lenders like CMBS would be. There may be a recourse component to most commercial bank and credit union commercial mortgage lending, but they've got good rates. Their rates are generally pegged to treasury yields, which have risen a bit since the beginning of the year. Today, I think we're at 20 basis points up from the beginning of January. It's had some volatility. But that means that commercial mortgage rates from banks and credit unions are still in the high threes to low fours, depending on the asset class and the location. And they are taking applications, they're closing loans. Debt funds still have historically high records of dry powder for value add deals, for construction deals. And actually there's more construction activity now than I was necessarily expecting in the first half of this year. There's been some up and down with labor costs and lumber costs and all sorts of construction. But the money in the capital markets are there for deals that pencil out. And from debt funds, there's a strong market. Life insurance companies still have money to play with as far as conservative commercial mortgage lending. So usually not the highest leverage point. You're not getting to 80% LTV with most life insurance company commercial mortgage products. But if you're at a 65 or 70% LTV with a property that's stabilized and you're looking for a bottom interest rate, life insurance companies still have capital that they want to put out for the long term. Their rates are creeping up, but still very competitive. And there is one part of the securitized market. So I mentioned CMBS being paused. The part of the securitized market that will still continue to rock and roll is going to be government agency-backed multifamily loans. So Fannie Mae and Freddie Mac loans. The rates have risen faster on that side than the treasuries have. So at the beginning of the year, we were at about, on the most, conservative, big market agency multifamily refinances, the low 3%, where's the interest rate range. It's closer to the high threes for the best properties now and the low fours for most properties coming from agency multifamily. Those are non-recourse. They're securitized, but they're securitized backed by a government stamp, a government agency stamped by a Fannie Mae or Freddie Mac. Those are still possible on multifamily properties in particular. So all of those other capital sources, plus equity sources like family offices and real estate funds, are all active. So this is not a doomsday scenario for the real estate capital market. Rates are creeping up. We'll see what happens with the Federal Reserve. Even bigger, we'll see what happens with the geopolitical risk. But the real estate capital markets are strong. So this was before the whole Ukraine-Russia thing that we can't say exactly how it's going to ripple out to every part of the market. We were looking to be potentially on pace for the largest commercial mortgage origination year ever in 2022. Now we'll see what happens. Nobody is good at predicting the future. I'm not even close to, an economist that says, here are all the fine-tuned, data that says where the economy is going to be in 6 months. But we're at a healthy pace. There's going to be some disruption in the next few months, but there's money out there for good real estate.
Yeah, thank you for that. And would you agree that people are not slowing down on commercial real estate? When there's a war, it's such a weird word to say, or this is happening. People, are they doubling down, right? People want to get into real estate. What do you see at your place?
Yeah, well, there's certainly going to be economic fallout from the Russia-Ukraine war. On the violence scale and will this turn into a larger conflict in Europe? It's so early and it's something that's arm's length. I'm not expecting this to disrupt U.S. real estate investing much, right? Now, there's ripple effects to everything, right? War is typically a negative economic outcome for anybody that's involved, and you've got sanctions on one side and you've got aggression on the other. it's not going to be a positive thing for the economy that there's a war going on. But U.S. real estate has a couple of tailwinds going for it that are going to keep it relatively strong. One is the fact that the U.S. currency and U.S. real estate are seen as a safe investment globally, right? And that's not just our own investors inside the country, but globally, U.S. real estate and U.S. currency are seen as a safe haven from, what could be less predictable markets elsewhere. The second is that when you're in the face of inflation, you want to own assets that are income producing and appreciating. What you don't want to do is have a suitcase of cash under your bed and under your mattress, because that suitcase of cash, it'll be nominally the same amount of cash as long as it's not stolen when next time you open it up, but it's going to have far less purchasing power the longer you wait if there's more inflation. You purchase a commercial property, and you can, especially if you can increase the income of that property, but if that property is also going to appreciate and the value of that property is going to go up, that's a hedge against inflation. It's something that we sometimes see investors put more money into real estate than the stock market, or certainly to bonds and to treasury bills in times like this. So I think there are strong tailwinds for commercial, multifamily, and certainly for residential and rental housing as well.
I have a quick follow-up to what you said 2 times before, and then I wanted to move the interview forward. So you mentioned dry powder, commercial banks, credit unions. Do you see, from an underwriting perspective, that they are anticipating a tightening of the monetary policy by the Fed, selling the bonds to the market, money might be a little tighter, not having as much dry powder? Are they being more selective on their deals currently in the current market, or what's your perspective on that?
Yeah, it's a good question, Jeremy. I don't think we've seen like an across the board tightening. That's not what we've seen. What we have seen is caution in certain locations and certain asset types.
So I can break that down across the 5 major commercial real estate asset classes, right? So we've got multifamily and industrial. And to pause there, they're both very strong. They're very, very strong because there's high demand for multifamily and housing in general. And there's also high demand for industrial properties. So as our economy continues to evolve to be more centered on e-commerce and delivery and last mile delivery, that's a need for industrial properties, and there needs to be more of them. There's a need for development. There's a need for continuing to evolve the industrial infrastructure. The capital markets are very strong for those asset classes nationwide. Then you have asset classes like retail, where it's going to be a tale of 2 cities, right? In Sunbelt states that are experiencing high growth, in high population areas that are classic gateway markets that everybody's investing in those places, retail properties are strong, and therefore the capital markets are still very strong, and they're underwriting to a full measure. But in places that have not seen the same economic growth, the same recovery from COVID, don't have the strong economic indicators going forward, retail capital markets are more cautious. In the office sector, where there's so many question marks about COVID and post-COVID recovery, the capital markets are more cautious. Hotels have seen a marvelous recovery as of recent months. And the capital markets are getting back towards hotels, though not as strong as they were pre-COVID. And so the capital markets are strong overall. There has not been a widespread tightening of commercial real estate capital, bar the recent CMBS situation that is probably temporary. But it really comes down to where and what. And if you're in the right where with the right what, capital markets are as strong as they could be.
I want to circle back to StackSource specifically. So, you mentioned debt funds still lending. I believe a lot of those funds, they do a lot of the bridge lending. Are you guys tied into do you tie in all these different capital market, I guess, subsectors, if you want to even say that's a thing, right? So let's just say I have a 20-unit apartment building. That's a value add, just because that's the majority of people I talk to. That's kind of like what they're looking for, or what they have, and they need some sort of, they want to get some sort of bridge lending, or maybe if it's larger that to get a bridge loan, but they just fill out an application or fill out the online platform. And does StackSource kind of search, just using data, it looks what is out there currently and kind of like pairs it up? Is that the best way of explaining what happens?
Close to. So we explored the whole route of like mining data, and as a matter of fact, there are a couple other competitive tech platforms out there today that say they mine the data across the country and look at the capital, the debt records for all these counties across the country, and look at every single lender that could possibly be known, and say, hey, we're going to search thousands and thousands of lenders for you and say these are the ones lending. The problem with that is, though, not all of those lenders are actually really engaged on the platform. So for our platform, we have more than 1,000 capital sources that are engaged, and they're engaged meaning we know who the point of contact is that is originating loans. We know the types of loans they're looking for, and not based on some historical, we mined records and saw you made this type of loan 18 months ago, because a lot can change in that period of time. The world is changing, that debt fund might be changing. And so it's more current, based on what the lenders are saying they can approve with their credit committees, what they're saying they are going to be competitive on, and where their appetite is. And it's based on relationships and engagement on the platform with these lenders. So we're at more than 1,000 capital programs on our platform, but not saying that, hey, we're mining the 8,000 or 9,000, technically there are these 8,000 or 9,000 different entities that have made commercial mortgage loans in the last 2 years. It is more whittled down to, these are the ones that are going to be engaged. These are the ones that are going to be honest. They're not going to retrade your loan. They're not going to delay your loan. So it's much more important to get a quality experience that's going to be on time, organized, trustworthy. They're not going to retrade you or mess around or not close a loan. Those things we found are even more important than saying, hey, there's some niche lender that we can mine data about and say they've done a similar loan. Getting engaged lenders that have quality reviews from other borrowers is the tact for us.
What are you doing with the other side of it, like guiding the clientele, common mistakes that people might be making? And, we have listeners that they haven't jumped in yet. They're, a lot of people are timid, and I think it's good. There's like a barrier of entry into real estate, right? Like, you're not just going to go buy property, but those people on the fence, how do you help them?
Yeah, so that's where the expertise of the capital advisor comes in. So any deal that's entered on our portal, you're getting instantly matched to lenders, but you're not being instantly reviewed by those lenders. The idea is the first person you're talking to about your deal is a StackSource capital advisor. They've seen hundreds of deals, they've financed hundreds of deals, and they know, hey, on this multifamily 20-unit value add that Jeremy was talking about, here are the things that are going to be really important to show a lender at first blush. So you're making a first good impression. You're getting great quotes. Here are the pitfalls. And so, it's what am I expecting once I finally get reviewed by these lenders? How do I put my best foot forward? What is the presentation of the deal? And much of it is automated, but that doesn't mean that the actual underwriting and the human element can't be automated, right? How is this going to be viewed by a human? What are the pitfalls on this type of deal? That comes from the capital advisors and their engagement on each deal.
Sweet. Thank you. Jeremy, we're coming to time. You got one more?
Yeah, so I think we always like to have a fun question near the end, Tim. So a recent book that you just read, what did you learn, and what are you implementing from it?
Okay. So in the lead up to this Russia-Ukraine situation, I had actually started reading a book from Bill Browder about his experience becoming, in the past, like the largest foreign investor in Russia, and the way that they operate and the way that their international business community operates. And I started reading that before the official conflict started, but I think it's been in the news for months that Russia was having military exercises, and it was just an excellent little look. And I listened to it as an audiobook, just about Russian geopolitics and not just their politics, but the way their business community has worked since the 90s. And it was a good little look for someone like me that was very ill-informed or less informed on what is the business landscape look like in Eastern Europe? How does that impact the rest of the world? So Bill Browder's book on that subject. You can also find YouTube videos of him being at a he's someone that Vladimir Putin kicked out of the country years ago, and so it was an interesting read to just hear more about that whole part of the world and the way they do business.
That's super interesting. No, thanks for sharing that.
Yeah,
Sure.
this is great. Not that many people talk about the current issues that we're facing in this detail. I like to think we have kind of a bland program to some degree. We're not trying to really cause any ruckus, but appreciate your insight. You can tell that you're really looking at everything in detail. Great company. I got one more question from me. Why StackSource?
Yeah. Oh, great question. Okay. So when you put together the money from multiple sources coming into a real estate investment deal, you call that a capital stack. And the idea was to have, and StackSource ended up sounding like pretty techie. Stack, we're sourcing the capital stack. But the reason it actually ended up as StackSource is because we needed a name for the company. And we weren't funded yet. And it was my co-founder and I putting our own money into the business and getting this up off the ground. And the .com was available. We went through a bunch of different real estate investment and real estate finance keywords and smashed together all these different combos. And we had a spreadsheet of well, what if we take this word and that word and this word and that word? And then we had a column for, is the .com available? And this one was. And so that was our future.
Awesome.
It's tremendous. So Tim, in closing, if anyone who's listening to this wants to get in contact with you or learn more about StackSource, where can they go?
Well, of course, the aforementioned stacksource.com. My email address is tim@stacksource.com. If anyone would like to reach out and learn more about, commercial mortgages or commercial financing, of course, or, building a real estate fintech company. But I'm on LinkedIn. I'm active on LinkedIn, Twitter, and Facebook, probably LinkedIn most of all. If you search Tim Milazzo, I should be the first one to come up.
Awesome.
It's tremendous.
Yeah, thanks for being here. Sadly, we must adjourn. We'll have you back on after some of this conflict. I'd love to hear, the repercussions of what's happening, not in a good way, right? But
yeah, no, I've enjoyed speaking with both of you. Thank you so much for having me on, and I really appreciate what you're doing here.
All right, it's Real Estate Investor MBA. I'm Tejas Gosai. That's Jeremy Moyer. Thank you, Tim. We'll see you all over the internet when this is out. We'll catch you next time.